In today's video, I will show you an excellent strategy that can be used in the time frame of 4 hours or more for Forex, mainly for high volatility currencies such as the Euro-Japanese yen. On this occasion, I will use it for the 4-hour time frame on the Euro-Japanese yen. Like one of the last strategies that I brought to the channel, the first thing will be to select two smooth moving averages. The first one we will configure with 50 periods, green, and we will increase its thickness a little. The second moving average, we will set it to 162 periods, we will change the color to red, and we will increase the thickness to the maximum. Once this is done, we will have to select the RVI indicator. We will configure this indicator in 200. We will configure the signal line in red and the RVGI line in green. We will then select the horizontal line tool, and we will mark this indicator with its center line of 0. This simple trading strategy is based on the crossover of the two moving averages and the center line of the RVI. We are going to take advantage of the crossover in these three indicators. That is, we will have entry signals at the crossover of the averages as well as at the crossover of the RVI lines. Apart from this signal that the crossing of the moving averages can give us, the moving averages will also give us the trend of the currency pair or financial instrument. If the 50-period moving average is above the 162-period moving average and the price is above both of these, the currency pair is in an uptrend. If the 50-period moving average is below the 162-period moving average and the price is below both of these, then the currency pair is in a downtrend. If the price moves between the two moving averages, the pair is in range, and we will not take trades. Example of a buy operation. First, we will have to see that the RVI is above its center line. If this is the case, we will expect the 50 moving average to cross the 162 moving average from bottom to top and price to be above it. If all this is true, we will carry out the purchase operation when the green line of the RVI crosses the red line from the bottom up. We will place our stop loss at the last low and our take profit at the support and resistance zones. As long as we have a risk-benefit ratio of at least 1:1, this means that we risk 1 to get 1. Example of a sell operation. First, we will have to see that the RVI is below its center line. If this is the case, we will expect the 50 moving average to cross the 162 moving average from top to bottom and price to be below it. If all this is true, we will carry out the sell operation when the green line of the RVI crosses the red line from top to bottom. We will place our stop loss at the last high and our take profit at the support and resistance zones. As long as we have a risk-benefit ratio of at least 1:1, this means that we risk 1 to get 1. Moving averages also function as support or resistance, where the price seeks support and then rebounds following the direction of its trend. This is why we can also use the price bounce movement on the 50-period moving average to look for market entries. Let's see some more examples. And ready, I hope this strategy has been useful to you. Do not forget that before trying it with real money, you need to try it in a demo account so that you can put it into practice by yourself. Do not forget to subscribe so as not to miss any strategy, as we upload the best strategies every week.